Hey, what's up, everyone? I am Lee Reiners, and I am the Executive Director of the Global Financial Market Center at Duke Law. And this is a narrated presentation about Facebook's new cryptocurrency, Libra. I've given this presentation a few times recently, and some folks have asked me if any of those presentations were recorded, and unfortunately they were not. So I thought it might be helpful to voice narrate my slides and put them online. Now, maybe you've heard something about Libra from the news or your friends, but haven't otherwise really put much thought into it, or maybe you have put a lot of thought into it and just want to hear what I have to say about Libra. Either way, this presentation is designed to provide a high-level overview of what Libra is, and then more importantly, to discuss its potential to promote financial inclusion throughout the world, and then the associated risks that come with that. And to be upfront and completely transparent, I think the risk outweigh the potential benefits, and I think it's also important for regulators and governments to act quickly to prevent Libra from launching, because if it does launch, it's going to be hard to put that genie back in the bottle, so to speak. But I also want to acknowledge that it is a perfectly defensible view to support Libra and argue that regulators should just get out of its way. It's a view I happen to disagree with, and if you watch this presentation, I think you'll understand why I disagree with it. But reasonable people can come to a different conclusion, and I do acknowledge that Libra holds the potential to be socially useful. In the interest of time, I won't get into all of the legal and regulatory issues and uncertainties associated with Libra, but I will focus on what I consider to be the most salient factors to consider as Facebook pushes ahead to launch this thing sometime in 2020. So with that, I hope you enjoy the presentation. I hope you learned something. So let's go ahead and get started. All right, so Libra was introduced to the world on June 18th when Facebook released a white paper and some additional documentation that describes the technical components of Libra as well as governance and some other factors. Speaking of governance, Libra will be governed by the Libra Association, which is a nonprofit association based in Geneva, Switzerland. The Libra Association originally consisted of 28 members, including Facebook, but now that number is down to 27 after PayPal dropped out of the Libra Association last week, and we'll talk about that. And each member will pay at least 10 million US dollars in Libra's capital reserve in return for certain decision-making rights. I say will pay because thus far no association member has actually ponied up the requisite $10 million. And these association members represent some of the leading global firms in a variety of different sectors, including payments sector firms such as Visa and MasterCard, leading technology firms, eBay, Uber, Lyft, some of the top blockchain firms, including the largest US-based cryptocurrency exchange, Coinbase, and then some prominent venture capital firms as well, including the well-known Silicon Valley venture capital firm Andreessen Horowitz. Now, at first blush, it might seem a bit odd that a payments firm like Visa and MasterCard are a member of the Libra Association, because after all, Libra poses a direct threat to their existing business model. But there is an old saying to keep your friends close and your enemies closer, and I certainly think that applies in this situation. After all, if Libra or cryptocurrency is the future of the payments industry, certainly Visa and MasterCard would want an upfront fee as opposed to a back row seat. Also, you have to wonder why some of these technology firms, such as Uber or Lyft, want to be a member. Well, it makes sense when you consider how Uber, for instance, currently gets paid, which is through linking to our credit card, and those come with fees. So Uber last year paid around $800 million in credit card processing fees. So if Libra can help them get paid from their customers and have to pay a lower processing fees, then certainly that would be something that's attractive to them and would incentivize them to be a part of this. There are also a few smaller nonprofits that are also association members. So as I said, right now there's 27. Facebook wants to have 100 members by the time they launch Libra, which they still plan on doing, they say, sometime in 2020. At the same time that Facebook released the white paper on Libra, they also announced the creation of a new subsidiary called Calibra. And Calibra will be a digital wallet for your Libra. And I know Libra is a bit confusing. I wish they would have chosen more distinct names, but it is what it is. And in case you don't know what a digital wallet is, it's simply an app on your phone where you can store your cryptocurrency. In Calibra's case, that will be Libra, as well as send and receive Libra to others who have a Calibra digital wallet or another compatible digital wallet. So that's the basic Libra overview. Now let's talk about the backlash. And the backlash to Facebook's announcement was swift, and the backlash was loud. So within 2 weeks of the announcement, the Financial Stability Board, the U.S. Federal Reserve, the Bank of England, the Bundesbank, and the Bank of France all issued statements saying to the effect that their respective institutions would carefully examine Libra and apply tough regulatory standards to it. Also, the Group of Seven nations immediately set up a high-level forum to examine the risk of digital currencies and specifically stablecoins to the financial system, and that's being spearheaded by a member of the European Central Bank, and they appear set to release a paper and some recommendations later this month. You also had a letter coming from the U.S. House of Representatives Committee on Financial Services. I don't know if it was a letter, but it was at least a public statement that requested Facebook and its partners immediately agree to a moratorium on any movement forward on Libra. And this was the sentiment was shared by both Republican and Democratic members of the committee who wanted a chance to review Libra and hear from Facebook representatives um, before Libra continued to be built out. Also, a bill was introduced in the U.S. House of Representatives titled Keep Big Tech Out of Finance Act. And this draft legislation was designed to keep large technology companies from entering the financial services world and developing their own currencies. So the language in the bill would prohibit large technology firms with more than $25 billion in annual global revenue from establishing and operating a digital asset that is intended to be used as a medium of exchange, unit of account, store of value, or any other similar function. So this draft legislation was specifically targeted to address Libra and other tech companies who might have similar ambitions to launch their own currency. It's not going to go anywhere, but nonetheless, it's emblematic of the level of concern that the Libra announcement caused. And then there were 2 days of pretty intense hearings on July 16th and July 17th. So David Marcus, the Facebook executive who's spearheading this project, had to testify for several hours on back-to-back days, and where he was asked some very tough questions. And keep in mind, this is less than a month after Facebook announced this. And so our Congress does not move very quickly. So the fact that they held hearings in such a short period of time, again, is reflective of the level of concern there is amongst policymakers around this new proposal. And then also in August, the European Commission is currently investigating potential anti-competitive behavior by the Libra Association, which is pretty astounding when you consider the fact that Libra hasn't even launched yet. So again, there's a lot of concern amongst regulators and governments around the world about Facebook's plans for this new cryptocurrency. So, given this level of backlash, you have to wonder, well, what's different this time? Because cryptocurrencies have been around for over 10 years, and by and large, governments have certainly taken notice, but haven't really moved aggressively to either regulate or prevent or promote, for that matter, cryptocurrencies and digital currencies. So why the level of backlash around Libra? And the answer is pretty simple, and that is Facebook's involvement is clearly a game changer. And it's a game changer, one, for the potential to promote financial inclusion. So Libra, really could help a lot of people who do not have access to banking services, as we'll see. But Facebook's involvement is also a game changer for the risks that come with having a privately controlled global currency. And that's something that we have to definitely keep front and center, is that Libra is not intended to compete or rival with Bitcoin, Ether, or other cryptocurrencies, right? It's clearly intended to rival the US dollar and other, heavily used global currencies. So that's the title of this presentation, right? Is the promise and the peril of Facebook's cryptocurrency. All right, let's talk about Libra's promise. And this is something that Facebook was, really keen on playing up, certainly in their white paper release, as well as in David Marcus's congressional testimony in July. And let's start with the fact that globally there are about 1.7 billion adults around the world who are unbanked. The majority of these adults are in poor developing countries, but even in the U.S., the Federal Deposit Insurance Corporation estimates that there are 8.4 million households that are unbanked. So the problem of the unbanked is not strictly isolated to developing countries. And of these 1.7 billion adults, 1.1 billion have access to a mobile phone. And mobile phones are effectively now bank branches in our pockets. So on my iPhone, I can take a picture of a check and deposit it. I can send money to my friends and family. I can invest in the stock market. So really, if you roll out a cryptocurrency on Facebook's suite of products, it has the potential to really benefit and help these 1.1 billion unbanked adults who do have access to a mobile device. Payday loans are a common source of credit for those who don't have access to bank accounts, and they can charge exorbitant interest rates, often in excess of 400%. And the cost to borrow just $100 can be as high as $30. When we look at remittances to low and middle income countries, that total reached $529 billion in 2018. And again, the World Bank estimates the cost of sending a $200 remittance was $14 in the first quarter of 2019. So simply put, it is expensive to be poor. And all over the world, people with less money pay more proportionally for financial services, and hard-earned income is eroded by fees from remittances and wire costs, overdraft fees, as well as ATM charges. So blockchains and cryptocurrencies have a number of unique properties that can potentially address some of these problems, and includes distributed governance, which ensures that no single entity controls the network and therefore is charging these excessive fees. Why does it cost $14 to send $200? Well, it's because there's at least one and most likely multiple intermediaries along that payments path that are each charging a fee. With cryptocurrency, right, it allows for peer-to-peer payments without the need for a trusted third party and the fees that come with those trusted third parties. Another property of cryptocurrency is that they're open access, meaning anybody with an internet connection can participate without restriction. And by and large, cryptocurrency payments are secured through complex cryptography, which ultimately protects the integrity of the funds. So again, these challenges regarding the unbanked and the excessive fees that accumulate to lower income folks, can be addressed by cryptocurrencies, but cryptocurrency has been around for a while, right? So how can Facebook and Libra, right, solve these challenges when they haven't, been solved, or really a dent has been made yet by existing cryptocurrencies? Well, the reason that existing cryptocurrencies haven't had much success yet is that they're just simply too volatile. So here is a chart that displays the annualized volatility of Bitcoin, as expressed by BTC on the left here, compared to the S&P 500, the gold, and the US dollar. And it's broken down by year from 2011 to 2018. in the blue, and from 2014 to 2018 in the red. And we can see that Bitcoin is just extremely volatile, many multiples more volatile than other asset classes such as stocks and gold and and currencies. And to hammer this point home even further, here is another chart that shows the top 10 daily Bitcoin price losses of 2019. So in 2019 alone, there have been over 4 days so far when Bitcoin has declined by over 10% on the day. So just think, if you are a merchant, why would you be willing to accept payment in a cryptocurrency that could go down in excess of 10% by the end of that day, right? So again, this is all pointing to the fact that existing cryptocurrencies are just far too volatile to be used as an effective medium of exchange. So Facebook and Libra intend to solve this challenge, right, by having Libra be a stablecoin. And there are multiple different varieties of stablecoins, but essentially a stablecoin is a cryptocurrency that maintains a stable value against a target price. In Libra's case, it will be fully backed by a basket of bank deposits and short-term government securities in, quote, in currencies from stable and reputable central banks, end quote. So that comes straight from the white paper. Now, there was a lot of uncertainty initially as to what currencies would make up the Libra reserve, and politicians were, certainly keen on having Facebook and the Libra Association address what currencies would constitute the basket. There was a lot of speculation that China would put pressure on the Libra Association and Facebook to include the yuan in that basket. And they had some success in 2015 with having the yuan added to the IMF special drawing rights basket. But recently, Facebook, in response to these inquiries, made a statement that, or told a politician that the Libra reserve will be backed by 50% dollar assets, 18% euro denominated assets, 14% yen denominated assets, 11% pound, and 7% Singapore dollars. So we still don't know the reason why they chose these weights and why they chose to exclude the yuan, but this is the information we are currently operating under. And so in theory, the fact that a basket of currencies back Libra should dampen Libra's overall volatility, because let's just say the dollar moves against the euro. Well, because the Libra reserve includes both dollar assets and euro assets, right, that volatility, right, should sort of be evened out. Again, that's in theory. There are still exchange rate risks that go into investing in Libra, certainly. But Facebook, again, has pointed out that the fact that a multiple currencies back the Libra reserve should lessen the overall volatility and certainly make Libra less volatile than existing cryptocurrencies. But as I pointed out, stablecoins have been around for a while. And yes, while most stablecoins are less volatile than big cryptocurrencies like Bitcoin and Ether and others, they have still failed to gain wide traction as a medium of exchange. So what's different again with Facebook and Libra, and why will Libra be successful when other stablecoins have failed? And the answer to that question is simply Facebook's scale. Facebook has over 2.3 billion active users around the world. And Facebook's stated intent is to integrate their digital wallet, Calibra, into WhatsApp and Messenger, so you can send and receive money as easily as you message friends, family, and businesses. So given the fact that they have such a large user base, that they will integrate their digital wallet, their Libra digital wallet, Calibra, into WhatsApp and Messenger and possibly some of their other um, services, and again, make sending value or money as easy as it's sending a text message or a photo. Um, this has the potential to become very big very quickly. So Libra could become systemically significant within a few months or even days of launch. And as other scholars have said, right now Libra may be too small to care, but within days of launching it could be potentially too big to fail. So no other cryptocurrency, no other stable coin, right, has the advantages that Facebook has when it comes to its user base around the globe. And that's what makes this, right, so different and so exciting, but also concerning for a lot of reasons. So speaking of concerns, that's what I want to talk about next. And I've broken these concerns down into these 6 sort of broad categories, starting with strategy, then privacy and security, Libra's reserve, law and regulation, technology, and then governance. So this list is not going to be exhaustive, but they do reflect what I consider to be the main concerns and challenges that people, I think, should be more focused on when it comes to Libra. So let's start with strategy. Facebook is not the most popular company in the US at the moment, to say the least. They're currently being investigated by the US Congress for anti-competitive behavior. The Federal Trade Commission has also launched their own antitrust investigation into Facebook's core business model. And of course, I'm sure many of you are aware of the intense scrutiny that Facebook has come under for its role in facilitating election interference by Russia in the 2016 presidential election. So, given the level of scrutiny that Facebook is currently under, you have to ask, why would they go ahead with launching a new global currency, right? What's in it for Facebook? Why bother sort of bringing an additional level of scrutiny, right, on yourself when you're already under a very, very bright spotlight? And the answer is not entirely clear. And this was a question that got brought up during David Marcus's congressional testimony in July. And he argued at the time that Libra will increase commercial activity on its platform. So Facebook is, at the very least, wants to make Libra kind of a native currency to the Facebook platform, and have, advertisers remit payment in Libra, and and they think that Libra, will increase commercial activity on its platforms, right? And the more commercial activity that occurs on its platforms, right, the more it can charge for ads, which is Facebook's primary method of making revenue. Another way that Facebook will make revenue or make income from Libra will be from the fees that Calibra charges. So Calibra is a digital wallet. Again, it's not an exchange, but they have said that every time a user sends or receives Libra via the Calibra digital wallet, there will be a small fee attached. Certainly, it'll be smaller than existing credit card processing fees. Now, because the fact that Calibra is not an exchange, this means that users will have to obtain their Libra elsewhere and then move it into their Calibra digital wallet. They will not be able to actually acquire Libra directly from Libra. And so the white paper notes that Libra will be supported by a competitive network of exchanges buying and selling Libra. As I mentioned earlier, Coinbase, the largest US cryptocurrency exchange, is a member of the Libra Association, and so you would assume that the Coinbase platform would allow users to buy and sell to buy and sell Libra. But you have to wonder, does Facebook ever plan on converting Calibra into an exchange, or creating an additional subsidiary that will become an exchange? Because most, again, in the U.S., cryptocurrency exchanges do offer, in addition to an exchange service, a wallet. So on my phone, I have a Coinbase wallet and a Gemini wallet that is where I can, sort of store my cryptocurrency, and then I can also send and receive cryptocurrency using my wallet as well. And this is a potentially lost revenue, or potential revenue opportunity, I should say, for Facebook if they do become an exchange. Now, certainly, if they had said that they wanted to be an exchange up front, this might have alienated some of the other cryptocurrency exchanges like Coinbase, who would be therefore less likely and willing to be involved in this project. But I do think it's something to keep an eye on and wonder down the road if Facebook will ever launch their own or convert Calibra into a Libra exchange. And then finally, when it comes to strategy and how will Facebook make money off of this, there's potential for additional financial services. And this is, again, something that David Marcus alluded to in his congressional testimony. But when you think about, what a digital wallet is, it's effectively a depository, right, for, in this case, Libra. And some have said because of that they Calibra should require to get a bank license. It doesn't look like that's actually necessary, but nonetheless, what's to stop Calibra and Facebook down the road, right, from making loans in Libra, based upon the balances in users' Calibra digital wallet. Now, of course, they have to get the requisite licenses, but there's certainly the potential for an additional financial system or additional financial services, and in fact, financial infrastructure really to be built on top of Libra. So needless to say, I'm a bit skeptical that Facebook just views the potential from their standpoint of Libra to be strictly more commercial activity on the platform. I think there are other revenue opportunities that they'll probably pursue down the road, and they're just not being as upfront about it initially, partially because they don't want to alienate association members or potential Libra association members. All right, so another concern regarding Libra and Calibra is regarding privacy and security. So Calibra is a separate regulated subsidiary of Facebook. So Calibra already has a money services license in the U.S. from the Financial Crimes Enforcement Network at the federal level, as well as licenses in states that require them to obtain a license to become a money transmitter. And Facebook has promised to keep Calibra's financial data separate from Facebook's social media data, so that there will be no information sharing, right, going between the platforms, between Facebook and WhatsApp and Instagram and Calibra, right? The problem with this promise is that Facebook has made similar promises before and broken these promises. So in 2011, Facebook settled charges with the Federal Trade Commission that they deceived consumers by telling them they could keep their information on Facebook private, and then repeatedly allowing it to be shared and made public. So this included things like users' friends list, which were made public when users thought that they were private. Facebook also represented that third-party apps that users installed would have access only to user information that they needed to operate, when in fact the apps could access nearly all of users' personal data, including data that the apps didn't need. Facebook promised users that it would not share their personal information with advertisers, right, when it did. So that's just, in regards to the Federal Trade Commission settlement in 2011. Then again in 2017, Facebook was fined 110 million euros by the European Commission for providing incorrect information stemming from the Commission's 2014 review of the WhatsApp acquisition. And at the time of the WhatsApp acquisition, Facebook told the European Commission that there was no way for user information on Facebook to be shared and integrated with WhatsApp, when in fact that from a technical standpoint was not true. And shortly after the acquisition closed, Facebook indeed began sharing user data between the two platforms. So effectively, they had lied to the European Commission at the time. So it's hard to take Facebook's promise not to share user data from the Calibra digital wallet across the Facebook suite of products. It's just not a credible promise. And in fact, there's an economic imperative that I think is driving Facebook to eventually sharing this information. I mean, our financial data, in particular, our payments data, is really the last, what I'll call honeypot for technology companies to collect before they have total insights and control into really all aspects of our lives. So when combined with the data culled from our social media profiles, our browsing history, and increasingly our offline activity through Internet of Things devices, our payments data will allow Facebook to know us completely. And in essence, to know us probably then we better know ourselves. So this data is extremely, extremely valuable to Facebook and to other platforms. And so I just don't, and others, I just have a hard time believing that that at some point down the road, data between Calibra and Facebook's social platforms will not be shared. All right, so let's talk about Libra's reserve. And the challenge for any stablecoin is how do you establish that initial reserve? Because think about what has to happen in order to do that. So let's just for illustrations purposes, assume that there's a new stablecoin that will be backed one for one by the U.S. dollar. And in order to create this new stablecoin and the reserve, right, it means people have to exchange a perfectly good U.S. dollar, right, for an equivalent amount of this new stablecoin. And we all know that the U.S. dollar is it maintains its value. It's very easy to use. So why would someone be willing to give up a U.S. dollar in exchange for this stable coin of unknown and uncertain utility? And so Libra gets around this challenge in a very creative way by requiring the Libra Association members to contribute $10 million up front. And in return, association members will receive an investment token that entitles its holders to interest earned on the Libra reserve. So this whole setup, mirrors an initial coin offering, right? And Libra is in Facebook. It has been Libra Association has been very clear that this investment token is in fact a security, right? That'll be conducted through a private placement. Now, they don't provide much additional detail, but we know that these investment tokens will be registered securities. And the important point to take away out of this setup is that the association members, as holders of the investment token, will be the ones who receive the interest earned on the assets underlying the Libra reserve. So the return on those reserve assets will not go to the holders of the Libra coin itself. Instead, it will go to the holders of the investment token, and the holders of the investment token will be the association members. And this entire setup is very similar to money market mutual funds and exchange traded funds, which are regulated by the SEC as investment companies. And there are a number of disclosure requirements that come with that. And so when you think about what a money market mutual fund is, in case you're not familiar, is that these are entities that hold only short-term government bonds and cash equivalents, so similar to the Facebook Libra Reserve. And the assets held by money market mutual funds are supposed to be very low risk and highly liquid. Similar to Libra, money market mutual funds are also open-ended with the number of shares driven by the demand for them. And with Libra, there's no limit on the number of shares that can be created. So provided there's demand for an additional share or an additional Libra, um, it can be easily created. However, um, unlike money market mutual funds, right, Libra will not be created directly by the public. So money market mutual funds allow the public to purchase shares directly from the fund and sell them back directly to the fund. Libra does not allow this. Instead, only authorized resellers are permitted to interact directly with the Libra reserve. So the authorized resellers will integrate with exchanges and other institutions that buy and sell cryptocurrencies for users. And these authorized resellers will provide these entities with liquidity for users who wish to convert from cash to Libra and back again. So the authorized resellers will, if they want to create Libra, will go out and purchase the requisite assets that make up the Libra reserve. They will present these assets to the Libra reserve. In exchange, they'll receive a new Libra coin. And so this setup of authorized resellers essentially mirrors how exchange-traded funds operate. And exchange-traded funds rely on entities known as authorized participants. And ETFs, in case you're unfamiliar, are marketable securities that back an index. So a common ETF would be one that backs or tracks the S&P 500. And ETFs do not sell shares directly to the public. So again, these authorized participants are the ones who buy shares of the stock that make up the index of an ETF and then sell or exchange these shares for new ETF shares of an equal value. And this is how new ETF shares are created. And it's very similar to how new Libra coins will be created. So again, the question is, well, if the management of the Libra reserve effectively mirrors that of an exchange-traded fund, shouldn't it be regulated as an exchange-traded fund? And that's very much an open question. The SEC hasn't had much to say on this yet. But where the SEC comes out will largely depend on the assets that back the Libra reserve. So as long as it's highly liquid currency assets, then it probably will not have to register as an investment company. But again, at this point, we don't have a lot of information about the process for selecting the assets and what they will be. So again, it's very much an open question as to how Libra's reserve will be treated from a securities regulation standpoint. So continuing with some issues around the Libra reserve, we don't know who these authorized resellers will be, and we just talked about the critical role these resellers will play in the Libra ecosystem. So, these resellers, just like authorized participants in the ETF context, operate as arbitrageurs, if you will, meaning that should the basket of assets, right, underlying Libra deviate in value from Libra itself, right, authorized resellers will interact in the marketplace to restore those values so that they're equal to one another. So let's just assume, for instance, that that Libra is trading at a price that is higher than the value of the assets underlying Libra. Well, and if that's the situation, the authorized resellers, right, will go out, they'll buy the assets underlying the Libra reserve. They will present that to the Libra reserve, in exchange receive new Libra coins, and then they'll go out and sell those Libra coins and profit from that difference. But in the process, what they'll do by selling the Libra coins and buying the assets is restore the value so that they're equal to one another. So this is a very, very critical role, and we just don't have a lot of information about who these entities will be. And how will they be chosen by the Libra Association? Along a similar vein is, will there be enough liquidity, right, to facilitate this arbitrage? Will there be enough exchanges that are offering Libra, right, to allow arbitrage to work. And so right now, Coinbase, as I said, is a member of the Libra Association, but there's simply going to need to be more exchanges. And there's no reason to think that there won't be. Um, but again, it's going to be very important that there be enough liquidity to facilitate this arbitrage so that prices don't get out of whack and that Libra ultimately maintains its stable value. And speaking of stable value, uh, that stability will ultimately depend on the assets in the reserve. And so we have some preliminary information about what those assets will be, or at least how they'll be denominated, but we really don't have any information, frankly, on how they'll be selected, who will manage the reserve assets, and who will custody the reserve assets. Will it be an external manager? Who's going to be the custodian? How will they be regulated? What jurisdictions will they be located in? And then also, because the stability of Libra depends on the assets in the reserve, right? Will the public be informed that in fact those assets exist? And this has been a challenge with other stable coins, notably the most prominent stable coin called Tether, which is backed one for one by the dollar. At least that's what they claimed. But they had some issues with the auditor, with an auditor that they ended up firing, and it turned out they in fact did not have assets that 100% back the number of Tether tokens in circulation. So in Libra's case, will there be public audits and the results of these audits made available to everyone so that we know, in fact, that there are the assets backing this thing that they claim? All right, so moving on to law and regulation. Libra is going to share many of the same properties that has made Bitcoin and other cryptocurrencies very attractive to criminals. So the Libra blockchain will allow clients to hold one or more addresses that are not linked to their real-world identity. Right, so identity on the blockchain is very different than identity in sort of the traditional financial system, where identity on the blockchain um, is simply what is known as your public address, which is a string of alphanumeric characters, right? So that's what's visible on um, on public blockchains. And so, given that, there's pseudo-anonymity provided by, the Libra blockchain, how will Facebook and Calibra comply with anti-money laundering and combating the financing of terrorism regulations? And AML CFT compliance, as it's called, can only occur at the access points where customers are engaging with a third party to exchange or send Libra. So you can't really regulate any given blockchain, including the Libra blockchain, because in essence are decentralized. These are decentralized software protocols. So you regulate and enforce regulation at the points of transfer where users and others, right, are either converting from fiat into Libra or cryptocurrency, or utilities that allow users to send or receive um, cryptocurrency. So as I mentioned previously, Calibra has registered as a money services business in the US, and Calibra is fully committed to complying with the applicable anti-money laundering and combating the financing of terrorism regulations in the jurisdictions in which they operate. But the challenge is that Libra is an open protocol, meaning that any entity will be allowed to come and build applications on top of the Libra blockchain. And, Facebook and the other association members will not have any say into who these entities are. I mean, or at least we don't at this point know how much, if they'll have any say. So there's no way that Facebook and the Libra Association can force, right, any other Libra wallet providers to comply with applicable regulations, or that exchanges that offer Libra will also comply, because these entities are independent of Facebook. And if these entities locate in jurisdictions with lax anti-money laundering and know your customer rules, it'll be very difficult, right, to enforce to enforce the applicable requirements across the Libra universe. And this was something that was very front and center during the David Marcus's congressional testimony in July, and a lot of politicians are very concerned around the potential for Libra to be used to launder money or finance terrorism or evade U.S. sanctions. And again, certainly Facebook and Calibra can police their own behavior, but it's going to be very difficult for the Libra Association to police the behavior of other entities that can build on top of this blockchain. And then the final point I have here is related to Libra derivatives. And the answer to the question, will there be Libra derivatives, is almost certainly yes, because we do have Bitcoin derivatives, including Bitcoin futures contracts. So it's safe to assume that should Libra launch, we'll also have Libra derivatives, which introduces a whole new set of concerns and questions. And it would also integrate the regulated financial system more closely with the Libra ecosystem and potentially introduce new sources of contagion channels. So should problems in one sector of, let's say, cryptocurrency market occur, they could easily spill over through derivatives into the regulated financial sector. Next, I want to talk about some of the challenges from a technological standpoint that are facing Libra. So Libra is currently a permissioned blockchain, but in the white paper, Facebook and the Libra Association are committing to transitioning to a permissionless blockchain within 5 years. In a permissioned blockchain, only a defined set of entities, referred to as validators, can shape consensus and governance. So initially, Libra's validators will be the 27 association members, plus any additional members that are added to the association. So this means that Libra will begin as a centralized system that is governed by the founding members of the Libra Association, who will all work to maintain the Libra blockchain. And there are several benefits to being centralized. First, it allows association members to maintain tight control over the development of the Libra software and quickly work out any bugs that are sure to arise. It also provides association members an incentive to promote the adoption of Libra because, again, they will receive the interest earned on the Libra reserve, so that acts as an incentive to get them to work and build this thing out. And finally, most importantly, permission blockchains can process higher transaction volumes than permissionless blockchains. So compared to permissionless blockchains where anyone can join and validate transactions, permission blockchains can process transactions much, much more quickly because only a select group of validators are needed to obtain consensus, as opposed to every node in a network for permissionless blockchains. In a permissionless blockchain like Bitcoin, the validators don't know or trust one another, so there needs to be a mathematical mechanism that allows all validators to agree on the current state of the ledger. And in Bitcoin, this consensus mechanism is called proof of work. And the problem with proof of work is that it takes more time to achieve consensus and results in lower network throughput. So if Libra is really going to fulfill its stated goal of becoming a medium of exchange, it will need to process transactions at a rate much higher than what is currently possible with permissionless blockchains. Now, the trade-off in being a permission blockchain is that you have to trust, right, the entities that are maintaining the network, right, that are the validator nodes. And in this case, it is the Libra Association members. And I see I have 28 founding members, but as you know, it's down to 27. So there is a trade-off, and again, the Libra Association Facebook's goal is to transition at some point to being permissionless, but only after they've solved the technological challenges that will allow a permissionless network, right, to process the number of transactions that it will need to become a medium of exchange. And so you have to wonder, how sincere is this commitment to become permissionless? And myself personally and others simply think that Facebook and the Libra Association has sort of made this commitment to permissionless to assuage many who are concerned about the level of control Facebook and others will exercise over this project and over this currency. And we wonder if they're sincere really in in their statement um, to become permissionless. So time will obviously tell, but there's nonetheless a significant degree of skepticism at this point. There are also a number of concerns associated with how Libra and the Libra Association will be governed. So as I mentioned, Libra will be governed by the Libra Association, a nonprofit based in Geneva, Switzerland, and and the governing body of the Libra Association will be the Libra Association Council, which is comprised of a representative of each member of the association. It's important to keep in mind that Facebook is just one member of the Libra Association, and as they are fond of pointing out, they possess no more power or control over Libra than any other member. Now, that might be true from a strictly legal standpoint, but certainly it is not accurate from sort of an energy and intellectual capacity standpoint. It's clear that Facebook is the driving force behind this project, but as the council is currently set up, Facebook will not have any more power than other council members. And the voting powers in the council will be proportional to stake. And that stake will initially be based on the Libra investment token, and in the future in Libra. Now, this voting power is capped at the greater of 1% of the votes of the council, or one vote. But still, this does create the possibility that should one of the association members accumulate a large stake in either Libra investment tokens or Libra, that they could exercise an outsized influence in in the governance of Libra and the Libra Association. And so that begs the question: will there be public disclosure of the largest stakes by individual members of the Libra Association Council? And then, in addition, what are the obligations and commitments that come with being a member of the Libra Association, right? Beyond the initial buy-in, should Libra come under stress, will association members go out and support it with via open market transactions? What happens if there's a conflict of interest between the association members' business and Libra? Again, these are all by and large, multinational companies, right, that have their own incentives. Now, might not always align with the incentives of Libra. And then finally, what's going to be the criteria for determining new members? Facebook has said that they want to add additional members up to 100 by the time it launches, and it's not entirely clear what the criteria will be for determining these new members. So there's just a lot of overall uncertainty around how Libra will be governed and the day-to-day sort of management of the Libra Association. There's also uncertainty around the exact sort of legal structure of the association under Swiss law, which generally forbids nonprofit associations from engaging in commercial activity or obtaining financial services licenses. So it's not entirely clear currently what the Libra Association will or will not be allowed to do from a Swiss law standpoint. Another concern associated with Libra is the lack of developing country representation on the Libra Association. So developed countries benefit from having established banking systems that intermediate consumer payments, and this is why you haven't seen major changes in how consumers pay for goods and services, and why Libra's adoption may be slow initially in the US and Europe. But Libra has the potential to make serious inroads in developing countries that have high mobile penetration but lack established banking systems. And so you have to wonder why don't these countries have a voice on the Libra Association? Now, there are a few nonprofit members, as I alluded to earlier, but by and large, most of the members of the Libra Association are multinational companies from the U.S. And Europe. And along a similar vein, Libra may shift substantial control of monetary policy from these developing countries to the Libra Association. So if Libra becomes the preferred medium of exchange, central banks in these countries will essentially become powerless to control monetary policy and, by extension, the economies in these countries. So, which is a critical component of what it means to be a sovereign entity. If you were to ask someone, what are some of the key characteristics of a sovereign entity, a common answer would be the ability to control your currency and money supply. And so, in effect, the Libra Association would be expropriating elements of sovereignty for itself without permission or without representation. And then also, it's a very complicated monetary policy environment right now. Interest rates in many European countries and Japan are negative. There's certainly uncertainty around monetary policy in the US as well. And so, if you introduce a new privately controlled uh, global currency, what is that going to do for the ability of monetary policy to, um, influence economic growth and economic activity? So, very significant overall global governance concerns associated with a potential private currency. So, given everything I just said about Libra challenging central banks and the effectiveness of monetary policy, it makes sense that central banks are responding aggressively, in many cases, considering launching their own digital currency. So, the Central Bank of China, referred to as the People's Bank of China, is set to launch its own cryptocurrency in November, if you are to believe press reports. And this cryptocurrency will be issued through a set of trusted institutions. Last year, Uruguay completed a pilot project of the e-peso, where the currency, the peso, was able to be sent and received via mobile phone, and that was a successful pilot. And then this past August, at the annual Central Bankers Conference in Jackson Hole, Wyoming, Mark Carney, the Bank of England governor, suggested a new synthetic currency that's provided through a network of central bank digital currencies that he believes could gradually replace the dominance of the dollar in international transactions. So we can think of this as essentially a digital and tradable version of the IMF special drawing rights. And so there are a number of different ways that a central bank can issue their own cryptocurrency or digital currency, and I won't get into sort of all those variations. But nonetheless, you are starting to see central banks move very quickly on developing or at least thinking about releasing their own digital currency because they recognize the threat and the potential for Facebook and Libra, right, to really upend monetary policy as we know it. So to wrap things up here, Facebook's scale is what gives Libra the potential to promote financial inclusion. Again, Facebook has over 2.3 billion active users across its suite of products. And it's this same scale that also threatens to undermine the global monetary order, which is why you've seen governments and regulators move so quickly and so aggressively. And it's also why you're starting to see central banks, research and in some cases at least, start to roll out their own central bank digital currency. And then finally, Libra is an existential challenge to the transnational financial regulatory community. Facebook is a global company. Libra is intended to be a global currency. It presents global challenges that can only be addressed through global institutions. And when we look at the institutions in place from a financial regulatory standpoint, we have the Basel Committee on Banking Supervision, we have the Financial Stability Board, but again, those are premised on an older model of financial services that is primarily bank intermediated. It's a very much an open question whether these institutions are up to the task of addressing the challenges and concerns that Libra poses. And technology waits for no one. And existing global governance mechanisms take time. and it just takes time to agree to consensus. And unfortunately, I don't think it's time that anyone can afford, given Facebook's past actions and stated intent of the Libra currency. So that's really all I have to say about this. It's certainly exciting, but it's also concerning. And as I said previously, once Facebook launches Libra, it's going to be very, very difficult to sort of, turn it back. And, if you sort of use this Uber analogy, right? Uber didn't get permission to launch its service. It just did it, and guess what? People found it valuable, and they sort of demanded um, that regulators sort of acquiesce. And so that could happen again here with Libra, which could genuinely be of benefit to many people around the world. And if it is, it's going to be very difficult for regulators to turn back the clock, right, or to take Libra away. So it'll be interesting to see what happens. Again, this is all speculative. It's a big if as to whether or not Libra will actually launch, but I think it's something that we should all be paying attention to. So with that, here's some information on where to find me. I am on Twitter at Lee Reiners. The Global Financial Market Center is also on Twitter at Duke GFMC. I encourage you to check out our website if you just Google Global Financial Market Center, you'll find it. And our center also maintains a blog called the FinReg blog, where myself and other scholars write frequently about fintech and other financial regulatory issues. And then finally, if you want to learn more about the basics of fintech law and regulation in the US, I encourage you to check out my online Coursera course that can be audited for free. If you just Google fintech law and policy, it should take you there. So I hope you enjoyed this presentation. Feel free to reach out to me if you have any questions or concerns. All right, bye bye.